Welcome, everybody. Happy Wednesday. Happy hump day. Welcome. I think we've
Hi,
got a
Marissa.
small but yes.
I said hi.
Oh, hey Nat. We've got a duo today. And I'm really excited. Natalie and I have worked together what, a couple times now?
I think we started our accounting careers over a decade ago together,
Yep.
working in
Different environment, different town.
cubicles back in the day when you sat in a cubicle and we did tax returns by paper.
With tick marks and blue and red pencils.
We've come a long way.
And now we're both here at Collective, hoping to provide some valuable information. Earlene, welcome from Tampa. Thank you for everyone who's joining. It's December already. It's the end of the year. Any highlights that anyone wants to share from your self-employed journey this year as we close out 2025? Shantae from Baltimore, welcome. Good morning, or actually, good afternoon. Hi, Diane.
Joining from Dallas.
We're really representing the Central and East Coast.
Penelope from Portland. You can also drop in the chat the type of business you have, and we can reference that as we give some examples during the webinar or during the Q&A.
Absolutely. Hi, Heather from Massachusetts. Medical device startup. Okay. Very cool.
Helix is also in California. I'm down in Los Angeles and Marissa's up in San Francisco. Hi, Mike, also in Los Angeles. Welcome.
Welcome, welcome. Letitia from Austin. Welcome. All right. We've got some consultants, tutors, writing services. Childcare in San Francisco. Hi, Ada. I'm also in San Francisco. We've got a tax preparer on the line. Welcome, iPad. All right, we're going to give it another second and we can dive in. Today, you've got two of us. Nat and I both have tax and accounting backgrounds. I'll turn it over to Nat to speak to her experience. I come from public accounting. Again, Nat and I worked together over 10 years ago. Old school cubicle style tax accountants. And life has led us here at a startup's supporting self-employed people. So really excited to speak with you all and answer your questions. And I'll turn it over to Nat for a quick intro.
Hi, I'm Natalie. I lead our onboarding team here at Collective. Similar to Marissa, I've had over a decade of small business experience. The last few years here at Collective focused on helping people set up an all-in-one solution. But previous to that, doing a lot of tax and bookkeeping, accounting at a small firm. And I'm excited to be here today and answer any questions you guys have.
Amazing. Just a real quick note, at the end of this session, we're going to do a live Q&A. So if you've got questions that come up related to the slides or not, or related about the business you shared, please use the Q&A feature in Zoom. That way we don't miss any of your questions in the chat. No bad questions here. And we're going to dive in. The agenda today that we've got, LLC versus S Corp basics. So as a precursor to this entire conversation, this is focused more on solopreneurs and self-employed businesses. So if you've got like a big company with a lot of employees or a C Corp that's looking to IPO. The direction of this conversation might not fit your business goals. However, it's still some pretty generic information about the tax code, tax statuses, and how you might make decisions for your business. So we're going to talk about LLC versus S Corp basics, when either makes sense, and then some key differences that you should consider. And then we'll pivot over to Q&A. Real quick about Collective, Nat touched on this briefly, but we are an all-in-one solution built specifically for self-employed solopreneurs. We really focus on the business of one model, so freelancers, consultants, side hustles that organically grew. They all need some kind of financial support, really to focus on your tax reporting and maybe optimizing your tax status. And so the idea behind Collective is we will provide and help you with all the administrative back office work needed to stay compliant with your tax reporting while you run your business. This webinar is for educational purposes only. Nothing contained in this or any related webinars should be viewed as legal or tax advice. Always consider consulting a professional if you do need legal or tax advice in operating your freelance business. And we're going to dive in. So LLC versus S Corp basics. This is a meaty slide, but we're going to talk about just real high level, what are the foundations of either structure? Understanding the differences, when can you switch to either or, will really help you understand what moves you need to make to optimize your business taxes, your tax reporting, and whether or not it fits your growth goals. So here on the left, we're going to focus on specifically single member LLCs. An LLC is a legal entity formed at your state level. Typically, it's done in your resident state, since that's where you're the ultimate taxpayer. Side note, you can form an LLC anywhere. It's popular to do Wyoming, Delaware, Nevada. However, you still have to register that business to where you live because that's where you ultimately pay the tax. So if you've heard some things about forming in other states, we can definitely talk about that in more detail. Generally, this legal entity is formed at your resident state. The legal structure is what gives you a legal business name, a tax ID, and it creates a layer of liability protection. So you start to separate your personal assets from your business assets. So this is the foundational structure, again, formed at the state level. A pro is they're relatively easy and inexpensive to set up. Every state assesses their own LLC formation fee. Here in California, it's $70 to set up. You can do it real easily with the Secretary of State website, or there are self-service tools like Send Business, LegalZoom, relatively easy to set up and maintain. The next piece is the tax reporting. Single member LLCs are considered disregarded entities for tax purposes, which means the IRS just views you and your business as one and the same, which means your business activity just gets lumped into your personal filing. Maybe you recognize the Schedule C. It's essentially a profit and loss statement. The advantage to this is that you're not filing a separate business tax return. So it's relatively simple to maintain your tax obligations as a single member LLC. One of the downsides is that when you report in this way, your entire business profit is subject to multiple layers of tax. And we'll talk about this in more depth. But high level, all your profits are subject to both self-employment and income tax under the simpler structure. The way you pay yourself as a single member LLC differs from adding the S Corp election. It's called owner distributions, which means you just take money out of that business bank account to use personally, or you transfer it from business checking to your personal checking to then use personally. So there's no formal payroll. You don't need a Gusto or ADP to pay yourself under this structure. On the contrary, you can have a single member LLC, so this is your legal structure underneath, that adds an S Corp election. The S Corp election can be advantageous. High level, it can help save in self-employment tax. So the S Corp election is actually a tax status made with the IRS versus an LLC, which is a legal structure that's formed at the state level. So you're telling the IRS how you want to report your business activity for tax purposes. One of the cons is that when you make this election, it triggers a lot more compliance with the IRS, which means there's related administrative costs that increase and your filing requirements increase. Now that you've made an S Corp election, the IRS expects all that business activity to get reported on a separate business tax return. So your tax profile is immediately more complex. The pro is the opportunity to save in self-employment tax. And so through this S Corp election, the IRS has something called a reasonable salary requirement, where the owner needs to pay themselves a salary run through a formal payroll process. And then only that salary is subject to self-employment tax instead of your entire profit, like in the single member LLC. So an advantage, opportunity to reduce self-employment tax. The disadvantage is the increased administrative and complexities with filing. So high level, the difference between these two, an LLC is a legal structure, while the S Corp election is a tax classification. A question we get asked often is, what am I, single member LLC or S Corp? If you've made an S Corp election, you're going to be both at the same time. Your LLC would be the legal structure underneath, and then your S Corp is how you're reporting for tax purposes. That was a pretty meaty slide. So we're just going to go over some high level topics about how you pay taxes as a solopreneur. All of us here are, maybe earning income in the United States, which means we all have to pay income tax. Your income tax is determined based on your filing status. So married, filing joint, single, head of household, and then your total household income will help determine your tax rate. So this can range from the federal level between 0 and 37%. If you live in a state that also has income tax, there will be state rates that also apply. So income tax, it's the unavoidable truth we're all subject to. Income tax will exist on your entire income, including your business income. Then separately, for self-employed people, there's self-employment tax. It's 15.3%, made up of Medicare and Social Security. So this is how the IRS collects money from, United States taxpayers to fund both of these systems. So when you're self-employed, you're paying multiple layers of tax on the entirety of your income. So here's an example of what it looks like just from a self-employment tax perspective. So this doesn't show the income tax piece, but here's an example. This is a solopreneur earning business profit of $160,000. Profit, again, is after they've claimed all their deductions, so what's left over. Here on the left, there's $160,000 of profit. Taxed as a single member LLC, that entire profit is subject to the 15.3% self-employment tax, yielding almost $25,000 in tax alone. On the right, the same person made an S Corp election. And under that structure, it does trigger that reasonable salary requirement. So in this instance, this person paid themselves a wage of $60,000. Now under the S Corp, only the $60,000 rather than the $160,000 is subject to the 15% self-employment tax. And so through this election and this person's unique circumstance, there was an opportunity to save almost $15,000 in self-employment tax alone. And so that's really the advantage of how the S Corp election can work. Everybody's situation is different. Whether or not you have a salaried role on the side can play into this. Whether or not you have additional self-employment income can play into the savings potential. And so depending on your situation, single member LLC or S Corp could be the best choice for you. So it's not one size fits all. I'm going to do a quick check in the chat. Feel free to put some chatter and questions in as we go through. And we're going to pivot over to when LLC versus S Corp makes sense.
All right, so let's dive into some of the differences and when it might make sense for you and your business to switch. Think of the single member LLC as something that might be best for you if you're earning under 60K in net profit. And perhaps you have other income like a W-2 income as well. Maybe you're testing out a side hustle or just getting started. This is a scenario where you might want to keep things simple because, as Marissa described earlier, you do have the extra administrative burden of payroll, which can become complicated. And then there's the additional tax filings. You may also live in a state or region where the S Corp election is less advantageous. Some states do have an additional tax on the S Corp. And so that's something you want to enter into knowing that you can, the administrative burden of those costs is outweighed by the savings. Typically, we see the S Corp election being valuable if you are in that range of earning 60K in net profit. This is your main gig usually. And you could still have other self-employment income and other W-2 income, but typically, your main line of work is the S Corp. And you want to put yourself on a W-2 with your business, right? So you want to be committed to that business growing, formalize it a little bit more, be ready for having that additional administrative responsibility as well. So this really, the choice of this really can depend on a couple different things. It could be, what are your long-term business goals? Do you want to take on that additional administrative burden? That's something we really help our members understand before they commit to making an S Corp election. I'll go into some of the key differences though. If you want to go into that slide. Thanks, Marissa. So first I'll kind of talk about the single member LLC. A little bit of this might be redundant based on what Marissa shared earlier, but we'll break it down by the different things that are required. So what the ownership of an S Corp looks like versus a single member LLC. So as a single member LLC, you'll take owner draws or distributions only. There's no formal payroll required. You could hire other people via payroll, but you as the owner of the single member LLC are not allowed to put yourself on payroll. For your tax treatment, all the profits are subject to that self-employment tax. That was that additional layer or burden of Social Security and Medicare. That's the 15.3% plus income tax. From the tax reporting standpoint, it's simply filing a Schedule C. So if you've been operating as a sole proprietor, but you decide that you want to open an LLC, your LLC as a single member LLC piggybacks onto your individual return, and it's reported through your Schedule C. From a bookkeeping standpoint, your single member LLC tax return just relies on the profit and loss statement. So you could actually, in theory, you could just track everything on a spreadsheet to generate revenue and expenses. As a single member LLC, you're probably receiving you're giving out a W-9, receiving a 1099. A lot of people will calculate up their 1099s and make sure that when they, are generating a profit and loss, that the, combination of those 1099, that 1099 revenue matches with what they have recorded on their profit and loss. The cost of maintenance for a single member LLC really just is LLC formation fees. You have some annual renewal fees and some state fees. And then in terms of like, if you hire a bookkeeper, maybe you have a little bit more complicated books and you do need a bookkeeper support or an accounting software. Those are some other factors for the cost of maintenance. The switch to the LLC, I'll switch over to talking about that, but the ownership and payment structure switches to where you split up how you're taking profit out of the business. So all of the profit is reported through a business tax return. Now your business has its own identity. It has its own separate return. And you as the owner are responsible for taking that reasonable salary that we talked about earlier. That salary and the distributions are how you split up taking profit out of the business. All of it still passes through to you on your individual return. It's reported and there's rules for how you must take it out versus as a single member LLC, no formal payroll required. You just are taking distributions or draws as needed. In terms of tax treatment, only the portion that's run through payroll within the S Corp is subject to that 15.3%. One of the perks there is that your business does get to deduct a portion of the self-employment tax that it's paying on your business. And then the distributions are taken to avoid that self-employment tax. In terms of reporting, I touched on this already, but you have a separate business tax return. That's the 1120S that's due every March 15th. It's due a month before your individual return so that you have time to get that K1 to then go file your individual return. Additionally, for tax reporting, you have payroll processing, and you must keep a set of financial records, so formal bookkeeping. And this is because your tax return relies on those financials to report income and expenses. It also keeps a balance sheet. So the S Corp is required to keep a balance sheet. Think of that as sort of reporting the health of your business. It's reporting how much cash you have, if you have any debt, and then equity, which is, did you make contributions, an initial stock contribution to the business? And it's recording all the distributions you take, because again, distributions aren't an expense to your business. They're not tracked on the profit and loss. They're something that we track on the balance sheet. Lastly, the cost of maintenance for an S Corp. This is where we want to make sure when you make a switch to an S Corp that this cost of compliance is outweighed by the savings. While the S Corp election itself, filing to become an S Corp, is free, the additional maintenance costs, such as keeping those comprehensive financial records, the payroll solution that you need to have. This is something that Collective, we have a payroll partner, right? Where you're filing those payroll tax returns for our members, making sure that those payroll tax deposits are made on time. There's a lot more rules around payroll. And then the separate tax filing. So that's some of the additional cost of compliance that comes in place with the S Corp. It's important to enter in with a partner in place to help you understand if you're ready to take the next step of compliance. That's something that we do for our members. Or if you were to schedule a call with us, we'd help you understand if your business is ready to take that next step. Can go on to the next slide.
Sweet. And real quick, we're gonna pivot over to Q&A. Tim, I see your question. We'll punt that to Nat in a sec, but we've got a quick poll. We'd love your feedback on how we can make these webinars the most useful for you. And so we're gonna give this a quick minute. And Nat, Tim's got a question for you. Where does the non-salary part of the distribution go?
Distributions they're reported on the balance sheet on your financials, so they don't impact your profit and loss, meaning they aren't an expense to your S Corp. When you go to file your 1120S, they're reported on the K1. So the total of the payroll that the S Corp owner takes and the distribution are reported. That distribution passes through to you on your individual tax return, and it is subject to income tax. So think of all of the profit that does not run through payroll as being subject to income tax when it hits your individual tax return.
And then to piggyback off of that, Tim, in terms of like cash flow, the way you receive your total compensation, and Nat did touch on this, is in two buckets now. So your payroll component, the reasonable salary, is going to be on direct deposit hitting your personal bank account from business checking. And that's how you receive that money. The way you get the distribution portion of your compensation is transferring from business checking to personal, and then you can spend it. So distributions are remaining profit. Remaining profit can be distributed out to you to use personally or not. But in either case, it's profit that's going to be subject to income tax.
I would say that's probably the most confusing thing for people when they switch is, oh, I'm allowed to take money out of my business account and just formal, it's more formal, but it is, I kind of think of it in different buckets of how you get to take it out of your account. And some people like to wait and take a distribution once a year. Some people need it more frequently. It really just depends on cash flow.
Yes, and actually, I'm gonna go back a couple slides, Tim, because you're bringing up a good point, and Nat's right. This is it is a question we get asked often. When we show this example, particularly on this right column, uh, people get tripped up on this owner wage 60,000, owner distribution 100,000. Well, does that mean that I'm only living off of a $60,000 salary? Is the question that we get asked, even though you made 160. And again, the answer is no. Your total cash flow for you to use as the business owner is still the 160. It's just that this one portion, the wage, is on an automatic cadence, and the remaining 100,000 is something that you facilitate as a business owner to put in your personal bank account. So you're still got 160 cash flow that's still yours to use. You just receive it in two parts. And we've got a couple more questions coming through. If you put your question in the chat, we kindly ask you copy and paste it to the Q&A. It just makes it easier so that we don't miss them. But we're going to dive in to a couple more. Nat, Stacy's got a question if you want to take that first one.
Stacy is asking, do you have to be an LLC in order to be an S Corp? Can you just be an S Corp? Great question. At the base of the S Corp, you do need to have an LLC in place. The LLC is your liability protection. The S Corp is actually a tax election. So it's not an entity type. There is a EIN, or basically a tax ID number, that is associated with your LLC that remains the same when you do an S Corp election. And then the S Corp election just changes how you're taxed. Again, a separate tax return is now required when we have the S Corp in place. Do you want to take the next one from Heather?
Yeah, so Heather is asking, can you elect S Corp without also becoming an LLC? Is there a reason not to do this? So this is similar to the question prior. In order to elect S Corp status, a legal structure needs to exist first. So for most of our members, well, for all of our members, it's going to be a single member LLC. That's just because collective focuses on the business of one structure, so single owned businesses. That's not to say you can't have partnership multi-member LLC that also elects S Corp. In either instance, that LLC existing is the legal foundation that needs to exist first. Can you elect S Corp without also becoming an LLC? So in order to elect S Corp, you need to exist as a legal structure first. It could be an LLC, maybe it's a stock corporation, but that's the foundation that the S Corp election needs to be layered on top of.
Question from Mike. How would you verify that I'm an single member LLC in California? I had an accountant set up the S Corp for me, but he was not communicative, and I don't seem to have any paperwork that says I'm an LLC. Is that even possible to be an S Corp without being an LLC? You could potentially have a C Corp or a stock corporation at the base as well. I doubt that. A single member LLC, you would have paperwork from the state of California. Mike, if you have your legal name for the business, it's a pretty easy lookup. I don't know if we could link that for Mike, but you can look up your business's name with the state of California to see if your business is in good standing. In terms of the S Corp, you would have received an acceptance letter. Now, the IRS is pretty slow on getting those acceptance letters out. So depending on when you sign that S Corp election, that would determine if you're an S Corp or not. The document you would have signed from your accountant is a form called a 2553. That is the election. You sign it. There's 2 pages and you sign it in 2 different places. So if that's something that you did, and your accountant fax that in for you. We actually fax those into the IRS. If your accountant faxed it in for you and you receive a letter stating that you are an S Corp, then you would be required to file for the year that is on the election. And usually they backdate, the date of when your election is effective is dependent on if your LLC is in place or not. So, for example, if you formed an LLC last year, you could have a 2026 election starting 1/1/26 and be taxed as an S Corp for the full upcoming tax year. Whereas if you filed your LLC in July of this year, maybe you backdate your election back to July 1st. So usually the election starts, it can start mid-year if the LLC is formed mid-year, or it can start at the beginning of the year if your LLC was open in the previous year.
This is a great question and topic I don't think we've covered on a webinar, but Mike, the Secretary of State business search for California is in the chat. And for anybody on the call who's not sure what their legal structure is, you can do a Google search, your state business entity search, Secretary of State, Texas business entity search, and you'll be prompted to go to your government website where you can search your legal business name. And most Secretary of States will show your legal structure. It might say, for you, Mike, it might say stock corporation, like Natalie mentioned, or it can say limited liability company. And what that's going to reveal, whether you have an S Corp election or not, is the legal foundation that exists at the state level. So for any of you on the call, you're not sure, maybe an accountant just set something up for you. You can do your own research and find the answer to your legal structure online. Sweet. Okay, we've got an anonymous question. So I'm confused on the benefits if you are paying, because a business still has to pay, as well as the self-employment tax, right? So am I missing something? Not sure of what. So I'm going to suspect that this is related to the advantage of the S Corp, because you're still paying some self-employment tax. And so if I'm misinterpreting that, I do apologize. But what the S Corp election is letting you do through the reasonable salary requirement is it's letting you carve out a smaller portion to pay self-employment tax on instead of your entire profit. So that's the advantage. If you remained a single member LLC or even a sole proprietor, you report your business activity on the Schedule C, so simple tax reporting, but that entire profit is subject to income tax and self-employment tax. With the S Corp election, only the reasonable salary portion of your profit is subject to self-employment tax. And then further, what Nat touched on earlier is that when you pay that reasonable salary, you're paying self-employment tax on that wage. And now this is a true employee-employer relationship where you as the employee will pay self-employment tax and the S Corp will pay self-employment tax. So now it's splitting the burden. And the portion that your S Corp pays, we call it payroll tax in this situation, that becomes a business deduction that lowers the profit you're taxed on. And so the advantage is kind of twofold. One, you're carving out a smaller portion to pay self-employment tax on versus on the entire profit. And then secondly, the S Corp gets to deduct its portion of payroll tax, which reduces the profit you're taxed on. I hope that was the question you were asking, and I hope we answered it. If not, please post another question.
I also wonder if Anonymous was asking about the cost of compliance to outweighing the benefit of the savings.
Yes. Okay. So that's a great point. So generally, when folks come to Collective, they're looking for a tax savings opportunity, right? Who wouldn't? Usually, well, I'll back up. The IRS doesn't put a profit threshold on who can elect S Corp status. There is no rule with the IRS on when savings make sense, but generally, you want the cost that you put in to outweigh or to be less than what you might save. And so it's really like, am I optimizing this new service that I'm going to pay for all this extra work? And am I still getting a benefit after it? So again, it's not a rule with the IRS. It's just if savings are your motivator to switch to an S Corp election, it may not be there if your savings potential isn't that high. And that's going to be based on your different circumstance.
And I always like to frame it as year over year, will this make sense for me? Because we know we talk to thousands of business owners that have variables to when, they get paid out on a big contract. But the S Corp year over year should make sense, should save you money. I would say don't think of it as a this year fix. It should be, is my business growing? Is this something that's going to benefit me for the next 3 to 5 tax seasons? Nathan is asking, is there a profit number at which it's stupid not to make the S selection, or is it a pros and cons decision all the way up? I wouldn't say there's a number that's stupid, right? Because we touched on this, Marissa touched on this a little bit earlier, where some states do have additional tax on the S Corp. It could really depend on where you live. Generally, we say anywhere between 60 and 80,000 net profit is when you should start thinking about it. This states with the additional tax, it could be more in the $90,000 to $100,000 range where the tax savings really do start to outweigh the cost of compliance. You also need to consider your goals. Everybody should have a financial advisor in their corner, especially when you're a small business owner. Like, what are your long-term savings goals? Sometimes the S Corp can really help you maximize those as well.
Mike, follow up. So Mike successfully found his legal entity with the Secretary of State Business Search. That is a win. It's a stock corporation. And how does that compare to being a single member LLC? So both of these, stock corporation and an LLC, are legal entities formed at the state level. So the first couple of slides, we really focused on the LLC. That's because that's what Collective is built to support, single member LLCs. But there are alternate legal structures, including a stock corporation. Depending on your state, maybe it's listed as a legal corporation. Um, it provides the same level of liability protection. It gives you a legal business name. It gives you a tax ID. So the foundation and the advantage is generally the same. And it's not wrong. So, Mike, I'll just preface with that it's not wrong. The difference is how these businesses are built to grow. So, a stock corporation allows for unlimited shareholders, unlimited or various classes of stock. So, usually companies that want to grow big, like IPO, Apple, Google, will use the stock corporation as their legal foundation. Um, Alternatively, LLCs are usually built to be closely held, smaller number of shareholders. Particularly when you add the S Corp election, it limits you to one class of stock, limits you to 100 shareholders. So LLC to S Corp is really built for a smaller business profile, which is why it suits a business of one to start with a single member LLC. Either legal entity can elect as an S Corp. So, Mike, there's nothing wrong. A common instance of this is and why this happens often is if you were to go to like LegalZoom and click a button that says, form a corporation or form an S Corp. The S Corp bucket is grouped with the stock corporations. And it's kind of like a terminology mix up because we're recycling the word corporation to mean two different things. So, what I suspect is people will click a button to form an S Corp. And what it's going to do is simultaneously form a legal stock corporation at the state level with the S Corp election on top. So it's still doing a two-part formation process with legal entity first and S Corp election. It's just that some processes are built to do stock corporation, S Corp election in one fell swoop. So Mike, there's nothing wrong with it. If you've made the S Corp election, it sounds like you're probably optimizing your tax structure for the way your business is built. It's not wrong. It's just an alternate legal foundation underneath.
Anonymous is asking, is it too late to do this for 2025? And I'll assume that you're asking, is it too late to do an S Corp election? The answer is no. We are running out of time, right? Getting close to the end of the year. The main compliance piece would be setting up payroll. Payroll does require employer registration, having someone in your corner to get you up to speed on the compliance with payroll, because you need to, if you want to be operating as an S Corp in the eyes of the IRS, that means issuing yourself a paycheck before the end of the year, and then making sure you have somebody to do your bookkeeping. Because if you've been operating as an LLC, and we get this a lot actually, people don't realize that you have to change your accounting records. So let's say you have a QuickBooks account that you've been using to organize your transactions for the LLC. You'd actually need to start fresh with a new file specific to the S Corp. So the S Corp has its own set of books that are totally separate from how you were previously doing it. So you would need payroll, bookkeeping in place, and then you need a partner to, review everything and file that business tax return for you. We actually start our tax process in December. We're starting it with all of our members right now, making sure, hey, we have a few pieces of compliance that we just need to check off the boxes, and then we can start tax prep in January. Because again, that return is due on March 15th. I will add,
Tim, oh, go ahead.
I
Go
was
ahead,
just
Nat.
going to add the caveat though, the S Corp election would not be, in my opinion, generally, it's not a good idea to do something like this if you don't have the LLC in place, right? You're not going to see much benefit of running out and forming an LLC today and doing the S election, because again, you need to have that LLC at the base of the S Corp.
Sweet. Tim, can the non-payroll portion of a distribution be directed to a non-Roth IRA so it wouldn't be taxed initially? Tim, I'm going to level with you. I'm not a financial advisor. High level, if you look at retirement plan options, there are some that allow employee employer contributions and some that are really reflected at the individual level. What I would focus on, if you have an S Corp, there are certain types of retirement plans, a solo 401k, maybe even a SEP, that allow a deduction for any contributions made. And in essence, it's kind of like taking a distribution or remaining profit and reinvesting it in a retirement plan. And in theory, it becomes deductible. So that's kind of like the pre-tax concept you're describing. In terms of a non-Roth IRA, I'm not sure if that specifically will work that way. Typically, traditional or Roth IRAs are reported at the individual level. So it would still be treated as a distribution if it came out of your S Corp, and then you contribute personally, and then the tax effect of that is reflected on your individual return. If you wanted to see something that moves the needle a little bit more, we typically see a solo 401k being used for this, and we've got a session next week with a financial advisor. If you've been to one of our webinars before, a couple of weeks ago, there were a ton of questions about retirement. Next week, we've got a financial advisor joining our webinar to answer all the questions. So just a little plug there. If you want to join that session, it'll be a great opportunity to ask these types of questions. Generally, a solo 401k allows for employee and employer contributions. What's nice about that is that the employee portion is not limited by any amount of income, which means you can do higher contribution amounts that lower your taxable wage. And then on the employer side, your S Corp can make a matching contribution. This is limited by profit or your wage, but then that contribution becomes a straight up business deduction for your S Corp. And again, that lowers your profit that you're ultimately taxed on. So I don't know about non-Roth IRA specifically, but generally there are opportunities with retirement contributions that can lower your tax bill.
I love the accountant in me loves that these questions are being asked before the end of the year, because so often members will come to me in the next tax year and say, what can I do to save tax on the prior year? And it's like, these are the kind of things we want to be planning November, December. How much are those contributions going to be? And we can really, like Marissa said, we can really move the needle with these solo 401k contributions.
We're going to pause real quick. I know we're at time. Thank you for the 58 folks still hanging on. Nat, I can stay on and we can get through these questions. This session is recorded, so we'll post it to YouTube later. So if you have to hop and we haven't answered your question yet, you can go to YouTube later today and scroll through to the end and see if we can get the answer to your question. Nat, was it me next or you next?
I think it was me.
Okay.
How much is the annual administration cost for an LLC versus an S Corp? This really is a subjective question because it could also just determine on your tax preparer. I have people who are paying, who come to us, they're paying an outrageous amount for their individual tax return to be filed. So maybe you're at like more of a boutique accounting firm that's charging you an hourly rate. Whereas if you're using a service like Collective, we're kind of bundling all the services and trying to make it a very approachable cost for our members. I would say the biggest cost difference with an S Corp is going to come down to that business tax return. Generally, we're seeing those be anywhere from, I don't know, $1,100 to $2,000 for a business tax return to be filed. How Collective works is we group that in with the cost of our monthly membership, just amortizing it out throughout the year so it's a little more manageable. Whereas with an LLC, you're going to just pay for that to be filed with your individual tax return. And then maybe you hire a bookkeeper to clean up your financials at the end of the year. That's commonly what we see. But then I see people who are on a bookkeeping subscription paying a couple $100 a month just to maintain their LLC financials. So I know I'm not giving the most direct answer because it really just depends on who your provider is. But with the S Corp, you're going to have three main costs, and it's going to be a payroll software, a bookkeeping software, and then a tax return. Now, you can try to do it yourself. I don't recommend that. This is something that you definitely want to have a professional in your corner to be reviewing the financials, making sure that you're compliant in the payroll piece, and then also using a CPA to file your business tax return. So those are the three main compliance costs. Whereas with an LLC, you may just have the bookkeeping software, a bookkeeper, and an accountant to file your business tax return at the end of the year, or your business and individual together.
I'm just going to reiterate something Nat said. Don't recommend trying to DIY, especially if you don't have bookkeeping or tax experience. I spent a long time in tax and I signed my dad up for Collective. He has an S Corp, and I just didn't want to manage all the moving parts. It's doable, especially if you like learning or you have experience. It is feasible, but is it worth your time? I've got a brother who's a freelance videographer, and he's going to be joining soon too. So really, it's kind of outweighing what is it going to cost me to do this work myself or figure out how to do it myself, versus finding the right support. So just reiterating what Nat said on that, the DIY approach, maybe at least for the first go around, is not recommended.
And I can add, we do a lot of cleanup too. Like at Collective, if we're taking over someone that's an existing S Corp that tried to DIY it, it's like you realize, hey, there's a lot of things up in the air. I could easily drop a ball here or there. And we try to just bundle it, make it super easy for our members. Do you want me to answer the question about Gusto?
Yes, please.
Heather is asking, how much does a payroll service such as Gusto cost for the W-2 salary? Their entry point, I believe, I think it's in the $70 range for a base, and then it's $12 per employee. Sometimes they run promotions. Actually, I should probably just direct you to their site, but it definitely can be around $100 a month, depending on what tier, because they have different tiers as well. So it's not cheap. We cover the cost of the Gusto subscription within the Collective membership for our S Corp owner as the sole employee.
Separately, and I'm not sure if Gusto has support for doing the initial payroll registration and setup. But usually, when you do payroll, it's not just the fee for the subscription, it's doing all sorts of employer registrations, figuring out state level unemployment rates. So, there's a lot that goes into the initial setup, also, that's handled through Collective in addition to the subscription.
That's such a great call out. Those, I think those start at 199 for the registration, the state registration.
So, it can add up quickly when you DIY as well. Anonymous attendee, how much pre-tax income do I need for forming an S Corp to be worthwhile? Is there a range? So we touched on this earlier. There is no income threshold to be an S Corp with the IRS. You can have an S Corp with a loss, any amount of profit, $1 million of profit. It doesn't matter from the IRS perspective. If you're looking for a savings opportunity, again, this is generally where the savings opportunity is more than the cost to do the extra work. If we're comparing the cost of Collective for a business of one, we found that that threshold is between $60,000 and $80,000 of profit. And so again, this isn't a rule with the IRS. It's just what's the break-even point where your cost of compliance is now less than your savings opportunity. So is there a range? Technically, no. But if you're looking for a savings opportunity, your business profit is over $60,000 to $80,000. It's a great time to have a conversation about adding an S Corp election. And then I'll take the next one because I suspect anonymous attendee is asking this next one. If you have an S Corp election and then your income decreases over the years, is there a way to dissolve it? So a plug, the IRS doesn't want you to flip-flop with the S Corp election. So there may be years with higher activity where you're really seeing the advantage of the savings and maybe another year dips. You can revoke an S Corp election, but the IRS prevents you from re-electing for 5 years. And so it's not intended to be a flip-flop and make the election and take it away 1 year versus the next. It's really intended for the long-term goals of your business. So in the instance that maybe you shut down your business, maybe you took on a full-time salaried role and that was the best fit for your goals, and you're no longer earning income as a self-employed person, that would be an instance where you shut it down and dissolve it. What that entails is revoking the S Corp election, I believe, filing some final S Corp tax returns, dissolving the legal entity at the state level. But yeah, generally, if your income fluctuates, it's not really a trigger to consider shutting down the business. It's more of are your goals to continue the business or not just a low profit year.
iPad is asking if I'm a sole proprietor and would like to become an S Corp, I would have to change to an LLC through my state first, correct? That is correct. As Marissa mentioned earlier, you also could be a stock corporation at the base, but you do need to have that legal entity in place first before you can elect an S to be taxed as an S Corp.
Sweet. Arlene, when applying for an LLC S Corp, is the IRS ID needed first? So the sequence of events, let's say you're a sole proprietor, so no legal entity is formed yet. The first step is forming an LLC with your state. Once that state approves your LLC, so you'll get some kind of notification that the processing window is done, your LLC is official, then you'll take that articles of organization and go to the IRS website and apply for an EIN. It's free, they're issued relatively instantly, I think. And you'll get an email with an IRS like confirmation notice that says your tax ID. You will need both your articles of organization and your EIN confirmation to properly fill out the S Corp election form. So you do need an EIN. It's typically done once your LLC is officially approved, and it's free. All of this is done through Collective if this is something that you're interested in.
Daniel is asking, how can I recoup total investment without having to pay tax on it? I might need to phone a friend here. Marissa, do you understand this question?
Daniel, I think maybe what you're talking about is capturing business deductions. So reinvesting your money into your business is essentially putting money back in, whether that's marketing or equipment or contractors to build, your website. That's putting money back in. That's investing in your business. The financial side of it is those are deductions that lower your profit. When you lower your profit through reinvesting in your business, that's how you don't pay tax on it, right? So you've got a deduction that's lowering your taxable profit, and you're only taxed on your profit generally. Daniel, if you're still on, we hope that answered your question. Let's see, next one. How can I get more info about collective membership? Does it cover all my S Corp needs like payroll, bookkeeping, and taxes? If you're still on the call, and thank you for being here, there are QR codes on our screen that will take you to a short questionnaire, and then it'll allow you to schedule time one-on-one with one of our advisors to talk about the details of the collective membership. The short of it is Collective will do everything you need to operate and maintain your S Corp to stay up to speed with any of your filing requirements. It includes monthly bookkeeping. We set you up again on Gusto for payroll and prepare and file your business tax return. Something we haven't mentioned yet is this is a really exciting time for Collective. We are expanding to serve more self-employed people with an LLC tier, meaning if an S Corp isn't the right path for you for whatever reason, and you want to stay a single member LLC, Collective can now support you at that capacity. Super exciting. We're just launching this week. Included in that LLC tier membership will still be the monthly bookkeeping. You'd have access to invoicing tools. We'll prepare that personal tax return for you that has that Schedule C. And so really, again, whatever tier you're on, whether you're electing S Corp or staying a single member LLC, the idea behind Collective is you've got one platform, one login, one subscription fee to bundle together the administrative parts of running your business.
There were a few questions in the chat in the last few minutes. I don't know if anybody wants to try to pop them into the Q&A box, or we could go through them.
Yeah, let's take a quick skim. We've got 43 folks still on. Thank you. I see a question from Teresa and Diana.
We have one from Brandy. Brandy, I'll take this one. I just set up my LLC for real estate in September. Congratulations. So far, I've only had expenses and no income. Can I file those expenses even if I don't have income for 2025? You could potentially also claim them as startup expenses in 2026. There is a limitation for how much you can claim as startup expenses. So I definitely consult with whoever your tax preparer is, whether that's a better option for you or not. But in terms of taking those expenses in 2025, you could, yeah, you could. If you have that LLC set up, you would take the loss and essentially, I don't want to misspeak, but he would carry the loss into 2026, correct, Marissa?
Generally, that's how it works. Sometimes there are limitations on allowing the loss to offset other income, but generally, especially in a startup year, you can still deduct those costs even if no income is shown. It can become an issue if no income is shown for a period of time and you're taking losses. But generally, the risk is low if it's a startup cost, it's year one, and you start to show income, immediately after. Let's see.
Mike, that's correct. Collective at this time, we do not work with stock corporations. You could still give us, schedule a call with our team to see if maybe it would be a better fit for you to switch your entity type. I'm not sure initially why it was set up that way. We can certainly chat with you though.
Let's see, Letitia, can you file for an S corporation at any time? So again, a legal structure needs to be set up first. So assuming you have an LLC, You're technically eligible to elect an S Corp election. Now, the effective date is where it may vary. Generally, the IRS wants you to make the S Corp election within 2.5 months of the start of the year. So, for example, if you want a January 1 S Corp effective date, you need to make the election by March 15th. After that, the IRS still allows you to make an S Corp election, but it follows a late relief process that's slightly more complicated. There's a little bit more hoops to jump through. It's totally doable. So generally, yes, you can file an S Corp election at any time, assuming you have an LLC or other legal entity in place first. And bear with us, we're skimming through.
Did we answer the one from Diana?
I don't believe so.
Diana asked, can we pay yourself in 2026 for 2025 services? Meaning, can you pay yourself on payroll? I think that's what Diana's asking. Can you pay yourself on payroll in 2026 for revenue you earned in 2025? The long and short of this is most small businesses are cash basis taxpayers, meaning that when that money deposits into your business account or when it hits the account, it's recognized as revenue. Same with the expense. So it may be a mute point to try to catch up and pay yourself in 2026, right? You want to claim 2025 expenses against 2025 revenue.
So I have a thought and I'm thinking of the best way to spit it out. Diana, there are other ways. What you're describing might be called accrual accounting, which means you're adjusting for timing. If you want to delay when you recognize income or when you recognize expenses, there is an accounting method for that. It is beyond the scope of collective, and it's really a personal choice on how you choose to do it. It does require a lot more hands-on, focused accounting to run books on an accrual basis generally. Nat is the accounting expert here, so I'll defer to her. Generally, it's a little bit more nuanced.
I would say we see accrual-based accounting. Usually when you have a lot of expenses, you're going to be incurring upfront for before you've earned the revenue. So maybe you're an e-commerce business where you create a big project invoice and you need to incur a bunch of expenses up front, but you're not clean. But in cash basis accounting, you wouldn't claim that income until your final deposit hits the account. So accrual helps business owners manage and understand their cash flow. For most small businesses, self-employed people that may be working on a contract basis, accrual doesn't really make sense. So you cash basis is what's going to allow you to understand on average how much am I actually profiting from my business. So it really just depends on the type of business that you have, but generally we do not see accrual accounting in small businesses.
All right, Daniel. Can Collective give different state sales tax info? So right now, Collective does not do any sales tax. We actually have a couple partners that we defer out to if your business has sales tax obligations. Collective members are primarily service-based, and so sales tax requirements vary by state. Most of the time, this isn't true as much now because tax laws are changing. Most of the time, sales tax exists when there's a product component, retail, or food service to your business. A lot of states and localities are starting to impose sales tax for services also. So at this time, we don't do it in-house. We may have some resources that we can share. But right now, we refer out to some partners to take care of that.
I will add the caveat that if you are using our invoicing feature within collective accounting, it will generate the sales tax rate for you. So we just won't file your return for you, but you can calculate that on the invoices.
Well, I think that's it. 37 folks still on the call going 35 minutes over. We greatly appreciate the questions, the engagement. Thank you for tuning in. Again, next week we've got a focus session on retirement contributions with a financial advisor. So please, again, these webinars are free. We love the questions, no bad questions. If you're interested in scheduling a call, there are QR codes on both of our screens. It'll take you again to a questionnaire where you can book time with an advisor to see if Collective can help with your business. Thanks for joining. We'll
Thank
see
you
you guys
all.
next time.